Hello and welcome from Buenos Aires, Argentina, to this episode of Crossing Borders with Nathan Lustig, where Nate has conversations with entrepreneurs doing business across borders and the people who support them, with a focus on those that have some connection to Latin America. My name is Josefina Dominguez, and I am an editor for LatinList, a proud sponsor of the Crossing Borders podcast. Sign up for our weekly updates on LatinList.com to get a summary of the week's biggest headlines in Latin American tech news. Nate's guest today is Rodrigo Sánchez-Ríos, founder and partner at Jaguar Capital, a real estate investment and development firm based in Medellin. Rodrigo is also founder of Haus, a Colombian proptech that is transforming the residential real estate industry in Latin America, and recently closed a $35 million Series B. They talk about Rodrigo's decision to go into finance with an initial background in computer science and his experience working at Lehman Brothers until right before the firm declared bankruptcy in 2008. He also talks about the market opportunity in Colombia's broken real estate industry and how they bootstrapped Haus from Jaguar Capital with backing from Pete Flint until eventually catching the attention of Kazakh Ventures. We hope you enjoy this conversation with Rodrigo Sánchez-Ríos.
Hey, Rodrigo, welcome to the podcast. Thanks for being willing to do it.
My pleasure. Thank you very much for having me, Nathan.
Where are you in the world today?
I have the privilege of spending the quarantine in Medellin, beautiful Medellin, Colombia.
For people who don't know, tell me a little more about Medellin. What's it like?
Medellin is the world's best kept secret. I actually wrote an article about why it makes so much sense for any startup in the Western world to set up operations in Medellin. It's just beautiful weather, perfect location. You're in the same time zone as the Eastern time zone in the US. Fantastic talent, fantastic people. It just has a work ethic that's very much aligned with what we're trying to accomplish.
Yeah, the work ethic, the modo paisa. That's as one of our investors says.
Exactly.
I think Medellin is very well poised to be one of the remote work hubs of LATAM. It's going to be really interesting. That's been a long-term trend that I think is going to go big.
It's one of our secret weapons in Medellin, in La Haus, using Medellin, weaponizing Medellin to attract talent.
So tell me a little bit about La Haus. What do you do?
La Haus is the leading transactional platform in Latin America. We fulfill dreams, avoid nightmares, in the most important financial decision of the 650 million Latin Americans buying their home. Right? At La Haus, we use technology, data, and service to democratize access to the biggest generator of wealth, which is owning your own home. And we've been successful for the last 3 years in Medellin, in Bogota, and now in Mexico City.
And where are you from originally?
I am from Tijuana, Mexico. I grew up in Mexico until I was 18 years old.
And did you always know that you wanted to be an entrepreneur, or was that something that came up in your business career?
It's a combination of both. When I was young, I really wanted to be like Bruce Wayne. I was like, whoa, that guy, Batman, but also has this fantastic company. And I wanted to figure out how one goes about becoming Bruce Wayne. And that was like an underlying theme. And so I knew that at one point in my career, I would strike out by my own, but wanted to assemble the building blocks of that capability.
You ended up going to school in the US. What was that decision like, and what was it like going from Mexico to school in the US?
So I had the very good fortune. I've been blessed in my life, but I had the good fortune of growing in a stable home that valued education. And as luck would have it, I'm the middle child, right? So I had an older brother who is 3 years older, and he became kind of like a model for me because he went through the whole process of choosing what college to study. And that opened my eyes to how powerful studying in the best schools in the US can be for your life, right? So I had that 3-year head start to prepare very carefully, as a Mexican student who usually don't have that type of context, particularly 20 years ago, of what it takes, SATs, letters of recommendation, extracurriculars. So I hacked the US college application process and ended up having basically my ability to choose where to go to school. And that coincided with the very strong influence of my grandfather, my mother's father, who grew up very much in Mexico and in the Mexican culture. And because of various life experiences, he equated Mexico with getting ahead by knowing how to play the rules and almost bending them, right? Whereas he equated the US with meritocracy. And he was very adamant when we were from a young age of building our life, our education in the US, gaining those tools and those values, and then coming back to Mexico once we're armed with those values. So long story short, I had the opportunity to study both at MIT or Harvard. And I chose MIT because I was a huge computer nerd, so very much into computer science. And because when I visited MIT and visited Harvard, I detected that there was a meritocratic environment at MIT and more of an elite structure, privilege environment in Harvard, right? So I said, I'm going to do my undergrad at MIT, and then whatever I end up studying for master's, I will do it at Harvard. That was kind of like my plan at the beginning.
And after studying, you went into finance. How did you decide how did you think about that career path, going into finance rather than as being a computer nerd doing something else?
Huge mistake, right? I graduated 05, 06, and had I gone into technology from the beginning, who knows where I would be right now. But what happened was that as a freshman and sophomore, I did internships in electrical engineering and computer science type of environments, right? Particularly my experience at Pratt & Whitney, which is one of the largest aircraft engine companies in the world. And so you have a, 20-year-old in Connecticut in a sleepy town working in this lab from 9 to 5. And where it was a beautiful environment to be in, but it wasn't connected with what excited me, right? It wasn't people that were living their best life and just excited about their work. It was very slow pace, very bureaucratic. And that's when I realized, well, maybe I messed up. I should have gone to Silicon Valley from the beginning. But I said, I don't want to have a engineering experience from the get-go. Where are the best and brightest? Where are my peers at MIT that are, the smartest and most ambitious people? Where are they going? And back then they were going into finance. And I remember distinctively, I was a member in this fraternity that very big with Latins, and my Colombian buddy, Pablo, he mentioned how he had the experience as a summer intern in New York. And he is someone that is very similar to me back then in terms of what we value going out. And it blew my mind. And so I looked into it. I was fortunate enough to get an internship working in banking in Wall Street in New York, and didn't look back. I mean, it was like being a kid in a candy store in New York back in 2006 with the boom.
And you went through the bust and ended up taking a different path that led you back to Colombia. Talk a little bit about that.
I was in the eye of the hurricane, Nathan. So I ended up at Lehman Brothers, and I left Lehman Brothers July 11th, 2008, roughly 45 days before it collapsed. So it was quite an experience. It taught me a lot about risk, about how not to have all your eggs in one basket. I saw, senior people at the firm, my bosses basically, literally see their whole life's worth collapse in front of them. People who had, before thinking that they were going to retire with $30 million nest egg, see that net worth collapse completely into zero. And living that, seeing that made me realize how I needed to first diversify and protect my own life circumstances to avoid that situation. I was very fortunate again to transition from banking to private equity at a fund that had just raised a $5 billion fund, right, at early 2008. So the world was in chaos. Everything was at, absurd discounts. And we had a $5 billion dry powder fund to go out and buy the whole world. So it was a lot of work. It also taught me a lot. Was spending those 2 years in that fund. And then that's when I realized, okay, I have enough of an experience going back to what we mentioned at the beginning, as a financial manager, as a corporate, business mindset. Now I'm ready to transition to something else. And that's where Stanford came in. And
why Stanford?
So basically, like my first choice initially was to go to Harvard, right? Because I had set up my life in that way. And it just made sense from everything that I knew around me, from the people that I was spending time with in New York. And it was one person, Adam Nelson, who was my office mate at Lindsay Goldberg, the private equity fund, who is like the most New York, the most, just call it, Wall Street person you can imagine. And he was the one that decided first to go to Stanford. He told me, he was like, I'm going to Stanford because we already have access to the New York lifestyle, to the private equity hedge fund world. If we decide that that's what we want to do with our lives, we already have kind of the passport to that voyage. Whereas through Stanford, we can spend 2 years of our life really thinking about what we want to accomplish, what motivates us. If it ends up being Wall Street, great, just come back. But if it's something else, that's really the power in that opportunity. And we use the regret minimization framework that I think, Jeff Bezos is best known for that, right? Like, what are the decisions that if you make or don't make them, that you'll regret when you're 80 years old and you look back in your life and think about, why didn't I do that? So that's really what was behind that opportunity. And Stanford being almost like the anti-New York, anti-Wall Street, that's where decided to spend those 2 years and determine for myself really what I wanted to do.
And when you finished, what did you decide you wanted to do?
So I had the great fortune of coinciding with Tomas and Jeronimo Uribe at Stanford, Colombians who had the I don't know how to, they convinced me and my wife to visit their hometown of Medellin. And that completely blew my mind. I had no idea what to expect. I was ignorant in the sense that growing up in Mexico and spending that time in the US, what you hear about Colombia, it's usually what people like, drugs and maybe soccer, but like nothing about the hardworking people, in particular in Medellin. So we came to this city. That was in July 2012. And I was blown away by how lush, how green, how well organized it is, how you can drink the tap water. My wife, who is a Canadian American, used to define the first world as wherever you can drink the tap water. And how hardworking and optimistic the people were here back then, and still now. So it really reminded me of how Mexico was in the 1990s with the optimism and being, finally integrated into the international, capital markets and globalization. That type of transition was happening in Colombia. And through Jeronimo and Tomas, I had friends, I had classmates who had the experience, the knowledge, the relationships to really capitalize on that opportunity. So, and because Stanford just infects you with the entrepreneurship bug, that's how we decided and crafted that business opportunity focused in Colombia.
And what did you end up doing?
So my background in finance and Tomas and Jeronimo's background in real estate, we combined that to set up the first, institutional quality real estate development and investment fund. And luckily, we had good timing and we were able to set it up and do the investments, the initial investments, just at the end of the boom in Colombia's growth. And so that worked out really well. Today, Jaguar Capital has over 350 million US of assets under management. And that was really kind of like my first big entrepreneurship experience.
What lessons did you learn on the development and investment side that you use in your startup today?
Absolutely. So through Jaguar, we assembled kind of like the three big building blocks that laid the foundation for La Haus, right? We realized as residential developers that all of our peers were making decisions based on their gut, right? So in terms of what to develop, when to develop, it was all instinct based. Very few people were using any data. So we saw that opportunity to optimize that decision. Number two, we were able from the very beginning at Jaguar Capital to assemble a team of data and technologists led by Santiago Garcia, our fantastic CTO, who like really built the capabilities to take advantage of that. So we had the opportunity, the technological capabilities, and number three, our own experience buying a home, right? As I mentioned before, I mean, I'm living, I had to end up building a home in Medellin because I couldn't end up deciding or convincing people of the right price I was willing to pay for the existing assets, and spending too much time, too much effort, too much frustration finding the home, that we said, well, let's put all those three things together. The fact that the supply side has no idea what to build and how to sell it, the fact that no one is using data and technology, and the fact that the experience for the buyer is so broken. And that's how we launched La Haus.
Talk a little bit more about the brokenness of the process for maybe people who aren't from LATAM that are listening to this.
Absolutely. So it boils down to a lack of trust. There is no trust in the residential real estate market in all of LATAM, right? It's the same in Brazil and Mexico. So what happens is that there's no repository of truth. There's no single source of truth. So people don't have any data to back pricing. So anyone who wants to sell a home sets extremely high expectations and just publishes on the plethora of listing services. Those listing services have no incentive to have correct information. They just want the number of listings to be as high as possible. So you have this information garbage, like ecosystem, and very high expectations from the sellers. There's no MLS, so there's no broker, institution. There's no way to organize the professional service providers. There's no regulatory or licensing required to be a broker. So you have an extremely wide range of service quality provided by these brokers. And because there's no exclusivity, all of these brokers just accept the asking prices, and they nurture those very high expectations from sellers. So what this combination of lack of data and bad service providers, bad brokers ends up with is a very frustrating experience for buyers, because buyers first are frustrated to find that in the listing services, you have duplicated, obsolete information about listings. You talk to a broker and they have no idea what's going on, and they are using inflated prices. And the end result is that it takes up to 14 months to purchase a home, right? To sell and purchase a home. That is really the underlying opportunity. And the best example I can give about how to fix this is what happened in China. This was exactly the same situation in China until Lianjia and Beike solved it. And now Beike is the largest proptech in the world with a $65 billion valuation.
Yeah, and the part that's so interesting about the real estate industry in Latin America, especially in Colombia, is that it's not a government problem. Like the repository of information and the signing at the notary, all of that works really well. And
that's
probably
true.
Actually
that's a good point.
Is potentially even better than in some places in the US. And so for people not from the region, they might say, oh, no, it's because the government's bad or there's not good institutions. It's actually not. The institutions are great. It's more along the lines of the stuff you're talking about.
That's a very good point. And Colombia in particular is a leader in how the government has robust, like tax information in terms of the underlying title. And it's just not used by the marketplace in the right way, because no one has created until now, right? A framework, a set of rules and incentives to motivate all of the different players to come together and to share information, to trust each other, and result in a much better outcome for everyone. We're a very much non-zero-sum focused game. With Haus, everybody ends up in a better place. The seller sells faster at a better price, like that he would end up ultimately selling for. The buyer has a much better discovery and closing experience. And the intermediaries have the robust technology tools to become much better at their jobs of convincing and finding a great home for everyone.
So you have the idea to start doing this because of the same problem that you had the problem yourself. What were your first steps? How did you go from the idea to actually having something, the 0 to 1 story?
It took a while because we were very excited about the potential, right? But because we were developers and investors, we thought that the solution, like the wedge, would be through the developers. So the first tool, the first go-to-market that we developed was as it's called solution for residential developers to figure out and optimize the best product and where the demand was going to be with the data that we had assembled in Jaguar Capital. And it was good product and good reception, but there was no willingness to pay. That's when you know whether you have product market fit, if people are buying your product. And the developers would say, yes, great, but I don't really need this. I've been doing good enough. I have had good results without any technology. So they were hesitant to adopt anything different. And this had more to do with the fact that Colombia had gone, from almost a failed state in 2002 to one of the world's most vibrant and fastest growing economy. So every real estate developer had done really well in the last 10 years. That's when we shifted the focus from the developers to the buyers, to people who wanted to make a life-changing decision of where to live and where to put their net worth into, because that's another very important psychological component to our product. In Latin America, real estate is the premier asset, the store of value, right? People talk about their real estate holdings the way in the US, people will talk about how they got into Google at its IPO price of 85, right? They talk about how they bought their apartment in the center of Bogota when square meter prices were $500 a square meter, and now they're $3,000, right? So tapping into that psychological need and the lack of trust was really what exploded our product market fit. First in Medellin, where we're based. That's where Jaguar Capital was based, and that's where Haus today has its headquarters. We found that product market fit, and that's where we expanded to Bogota, which is a much messier city, much larger city. It's almost 10 million people. And the trial by fire was reproducing the success that we had in Colombia, which is, to be fair, our home field advantage based on all the experience that we had in the real estate market there. We were able to reproduce that success in Mexico City.
Finding investment for startups is still challenging in Latin America, but when you first were starting, it was just at the beginning of kind of the boom taking off.
Right.
Talk a little bit about that story. How did you raise money, and what was your strategy to get it done?
So, I'm going to go one step behind, and I'm going to talk about how difficult it was to raise money for Jaguar Capital back in 2013 and 14. That's when no one was interested in Latin America, right? So we were fortunate enough to have the initial backing of one of the premier real estate private equity experts in the world, which is Nori Gerard-Leeds. She was a professor at Stanford. And she looked at the data, and we were able to, convince, the same way that Tomas and Jeronimo convinced me to visit Medellin, we convinced her to come to Colombia, and she got it. She got the opportunity. So she committed her time and her capital as an anchor investor at Jaguar. And that was really what got the ball rolling, right? So I would say that sponsorship matters significantly. And if you're able to find someone who believes, it's much better to find true believers than to convince people. So my greatest takeaway would be that find people who already believe in the things, in your vision, in your market, and convince them that you're the right vessel for that, commitment, for that conviction. And that was true, and that had tremendous results. We know we now deployed 350 million in Jaguar, and that had the same result at La Haus. And that first true believer was Pete Flint. Pete was the founder and CEO of Trulia, one of the best proptechs in the US. And he had seen how data and technology had improved the experience for buyers in an already, let's call it, organized and well-functioning market like the US. So when we showed him how messed up the status quo in Latin America is and how much bigger the opportunity to solve it is, he believed right away, and he became our first institutional backer.
And from the first backer to the building the business and getting follow-on funding, talk about that story.
Yeah. So, once you have someone like Pete Flint behind you and the initial capital. So we bootstrapped La Haus from Jaguar Capital. That was also a great advantage, right? That we had the initial success. So we had the, let's call it, margin of safety to explore opportunities. Once we struck gold in Medellin and we convinced Pete, it was back to replicating the success and jumping from Medellin to Bogota. That was what led to the second biggest, jump in our evolution, which was attracting CASEC Ventures, which, I cannot speak any higher of Hernan Casa, who is a member of our board. And we really owe that relationship to David Velez, who has also been a fantastic mentor and advisor to Tomas, Jeronimo, and me, because I met David in New York, right, when we were both investment bankers, and then we coincided at Stanford, and we started basically our businesses at the same time. Like, he started Nubank and we started Jaguar Capital, which was, as I mentioned before, a traditional, let's call it, real estate company. And we were seeing how dramatically David was having, an impact in the whole financial institutions of Brazil. Whereas we were having a good impact, but very much at a different scale with our real estate investments. So that's when we also said, well, how can we multiply our influence, our impact through data and technology? And that was another impetus for La Haus. So once we got La Haus up and running, once we got Pete to back us and to really see that it was worthwhile to put in all of our attention, all of our resources, we got to grow. We got to replicate the success in Bogota, and through David, we really connected with Hernan, and with CASEC, we've been able to execute at a whole different level.
If you could go back to when you were just finishing your undergrad, knowing everything you know today, what advice would you give yourself?
I would say take more risks. Take risks earlier on, right? So I graduated from MIT as a computer scientist. I could, with that understanding of what I could do, I would have taken much bigger risks from earlier on, because I know now that I could have relied on myself to let's call it pick myself up. If I were to fail, I'm extremely privileged to have that safety net of the education, the relationships, the network of just support structures. And in a way, I wouldn't change anything, because if I change things, I don't know where I would be right now. I went almost like the safe route of going through banking, through going to private equity, which is a very structured and, let's call it, conservative approach to early life, right? Early professional. It's still extremely advantageous, and it opens up a lot of worlds. It gives you fantastic skills. I would say that my financial and Excel skills are second to none, right? But it also provides you, it's a high cost. 4 years of my life that I could have just gone to Silicon Valley and started working in tech, and who knows where I would be. But I wouldn't change it because it was through banking and private. It was through Adam Nelson that I met my wife, right? So, and built the life that I have here. And who knows, if I had not gone to Stanford, I would never have discovered Medellin. And now I'm speaking to you from the beautiful home I built in Medellin. And I have 5 Medellin children, my 2 boys, my girl, and the 2 companies based in Medellin that we've nurtured and seen grown here. So I would just summarize as that: take more risks.
Do you have any books, blogs, podcasts, or documentaries you like to recommend to people, whether about business or just life in general?
Books in general, like for a general audience, I would say, How Will You Measure Your Life? That's a book that really changed my perception, and particularly when I had children, right? I used to be extremely focused in just like, let's call it professional, development and outwardly measures of success. And ever since, my kids were born, and what changes is your priorities, and all of a sudden you have almost like a default time allocation. Like before, I would finish my work or do whatever. And okay, what am I going to do now? I don't know. I can like watch Netflix or go for a walk. Now, any single moment, any single minute that I have free, it defaults to spending time with my family, right? So the opportunity cost of my time went up exponentially. And this book really talks about that, about, well, what is going to be the type of, let's call it KPIs that you want to optimize for when you're 80 years old, looking back into your life. And it changes your perspective. It makes you prioritize. Time management becomes extremely more important, and it's just applicable to anyone in whatever situation or age they could be.
That's really good advice. I'm going to check that one out. What's next for you and the business over the next year or 2?
So we're extremely excited about the opportunities ahead of us. So we raised a $10 million Series A, very privileged also for that timing early in 2020. And what happened with COVID is that it accelerated all of the trends that we were betting on, right? And in particular, there are 3 tailwinds behind our work. First, because of the unprecedented macro policy decisions in the world, like at the Fed level and in Latin America, driving down interest rates, that is making home ownership much more affordable, for like unprecedented levels of financing opportunity in Latin America. So that is really improving the demand that we're seeing for home ownership. Second, because of the high penetration, the digital penetration of Latin America, with Brazil and Colombia having one of the highest levels of smartphone penetration per capita, we are seeing that people are now demanding the type of digital first experiences for anything they do, including buying a home. And third, because the traditional channels have been so impacted, right? The way people used to buy homes with their brokers or going through storefronts, that's been very much hindered by the lockdowns. That has accelerated all of our business trends. So we're doubling down on product, doubling down on our data advantage, expanding our presence. Our market share has exploded. We were at 5-6% of transactions, and we went up to almost 30%. So we have our heads down, executing on this fantastic opportunity, and looking forward to bringing our solution to more markets and to more products in the supply, in the value chain of buying a home.
Thanks for taking the time to do the podcast. I really enjoyed it, and it's going to be great to watch you continue to execute and make life better for homeowners in the region.
Thank you, Nathan. It's been a pleasure to share our story. Looking forward to telling you more as we progress.
Thanks again for listening to this episode of Crossing Borders with our guest, Rodrigo Sánchez-Ríos. And thank you to Angel Andraca for producing this podcast. If you enjoyed this episode, please share with a friend and give us a rating on iTunes or wherever you listen to podcasts. It's the best way to share what's going on in Latin America's ecosystem.